Everyone having a great 2022 so far. Sebastian and myself look forward to just talking with you about what we see going on in the real estate market, which continues to be very active and very record-breaking. So happy New Year, everyone, and let's jump into it. So what we're going to go over is just as some of the news markets highlights over the last month. And then we'll get into some specific GTA area updates from the Toronto Real Estate Board. And then I'll do a quick of some of the best places to buy now, which is going to be a little different than prior months when I talk about what's good to buy now, as you can probably imagine with the craziness. And then Sebastian will get us into some mortgage updates, and then we'll close with some summary and predictions and our closing thoughts. So what are some of the major news highlights? Now, real estate has been a ton on the news over the last couple of years. So what I've done here is just highlighted a couple of articles which I think summarize what's going on. First at the top here, we just talk about the unhinged prices, and they completely are. So 2021 was not only a record year in sales, but they were also in prices. So we can, as it mentioned, just continue to expect there to be a low supply this year as well, which be a natural consequences of record sales in the prior year. On the left-hand side, well, what do the experts say? Well, basically the experts are saying they don't see any immediate reason for any price decreases or the current mood to change. So basically things will just maintain a status quo, be very active, be a very hot seller's market with a very low supply with low rates. Again, until there's something that would actually change, which makes sense. Why would, a body in motion would stay in motion until something's going to knock it out and give it a change? So at the bottom, in addition to the crazy market, immigration should start opening up more again. Again, during COVID, immigration was a lot slower. So as the next sort of big wave of immigration comes up, that's expected to, again, add some more both renters and buyers to the market. And again, so a lot of the immigrants that come in, as Seb will talk about it later, like, they're very educated working class. A lot of them start out as become renters and workers in the economy, which is great for landlords and companies. And then as they save up and get stable, they also look to buy. And again, which is getting a little harder for any first-time buyers. So whether you're local or foreign, it has become somewhat hard for first-time home buyers who aren't sort of wealthy to get in. And the last one here on the right-hand side is the one naysayer. So there are always the naysayers out there. And there are those who believe this is finally going to be the year, they've been saying this since 2007, where the Canadian housing market will actually crash. So basically they're predicting, again, the doomsday as they have since 2008 when the US market crashed and our sort of stayed somewhat stable, is, they think it's going to happen here finally. And part of their logic is saying is that the homeowners here are stretched, right? And they can't afford mortgage rate increases. Now, again, I would agree if a lot of the home buyers, and they're referring to in the debt level, were some of the people who they identified in the report. However, as we'll see later, a lot of the people who are buying the properties are not actually, lower income first-time home buyers. Are actually more wealthier clients who have the deeper pockets who can handle a, 1 or 2 rate increase. So I don't see it happening. And again, a lot of the experts, the banks, don't see a crash happening per se, because although debts have increased in Canada, the amount of, with those who are the investors in the real estate, they won't be as hardly hurt by anything with rate increases, in my humble opinion. So in addition to the news highlights, just going to jump into some more about these investors so I was just talking to. So who is primarily fueling the craziness? Well, it's to a large part the last couple of years, it's been investors. And you can't really blame them, as there's been a lot of factors that's lined them up. So a lot of homeowners, a lot of my clients, they've just got a lot of equity in their house now. Last couple of years, they're sitting on this value, so they want to use it. Now, combine that with the Bank of Canada promising low interest rates for a couple of years. Okay, I got a ton of equity, I got low interest rates. What can I do to get some value out of it? So we've created a situation to help spur this. So a lot of people have gotten into, who have never been investors before, have now jumped in. So there's a lot of new mom and pop investors, as well as the serial investors who've always been around. So those are deeper pockets. It's been an even better time with their, they have great credit rating, they have great assets. Now they can just buy more and more assets. So the graph there on the left-hand side is just basically the graph. So the blue are the first-time home buyers, the yellow are repeat home buyers, and the green are investors. So basically, as you can see throughout history, they've sort of went in sync together, with first-time home buyers sort of leading the pack for the most part as the largest individual group. And then during the last few years, you can see what happened. Investors have sort of taken off. Repeat home buyers who already have the equity have sort of increased. And those first-time home buyers, although the number of home buyers, and they've also increased, they've had to do it at a slower rate than the other two because, again, they don't have an asset to increase in value. They don't have the profile to be able to buy up as much as the investors or the repeat home buyers. So it's been a huge increase over the last couple of years in buying. But again, the majority of that has been the investors and the repeat buyers. So one point there that I guess the Bank of Canada and CMHC, which is our Canadian Mortgage Housing Corporation, so they've been looking at, it's their job to look at the data. And what comment he made a few weeks ago is that, as he's seen 50% of all purchases now in Canada, not just the GTA, but this is Canada-wide, so across Canada. In the GTA, I'd expect to be even more concentrated, but they're by investors or repeat buyers. So, he's saying these investors could be, again, he doesn't want to call anything out, be black and white, but he's saying this could be a source of instability for the financial system and the economy more broadly. And this coincides with comments a month earlier where he was saying it's become a self-fulfilling prophecy for investors where they buy with their presumption of price increases, and then by continually the speculation, they're creating that. So, and speculation works until it doesn't, right? So there's this environment going on right now, which a lot of people don't feel are healthy. But again, the situation, the Bank of Canada said we'll get more into rates. It's still there. Nothing's fundamentally changed. Rates are still low. Equity is still going up. People still have cash, so they're still going to be buying. So those are some of the new highlights. Those are some of the issues going on. So I just want to show now just one example of, I call it GTA condos gone crazy. So in the last couple of weeks, I've had a client, we put offer on a couple of places, and we didn't get them. She was sort of priced out. So, and I've just sort of highlighted a couple of ones that we were interested in. So one of them had 27 offers, one had 15, 12, and the low one at 11. So again, so we did put in offers on 2. Unfortunately, we didn't get them. We were close, but we didn't make the upper tier of people who just paid. And so this FOMO, or fear of missing out, by a lot of people as they just see things going out of range, or they just want to get in now, get some assets either for themselves, for their children, or, save up for whatever reason people want to get in. There is a sense of huge FOMO right now, which is leading to record prices. So this is one of the buildings which we liked. So I just looked at some of the listings from October to December. So if you look at October, it was going for about 800 a square foot. Then in December, it was 880 a square foot. And the one that we wanted to buy, it went for 1,300 a square foot. So again, smallest unit, highest price. So again, it was increasing last year about 5% a month per square foot, which is okay. But then between December and January, it just sort of kicked in overdrive. And I've noticed a lot of more condos, again, supply of house went down. The difference in price between condos and houses decreased, making condos more looking like better investments. But again, these are just record prices. And, this is an extreme example. Most I'd say have only went up like 10% since December. But again, there has been a significant increase across the board in condo prices. I'd say more in like the 10% range, 10 to 15. This one just sort of stuck out. I thought I'd point out that it's getting a little crazy out there. So with all the craziness, what are some of the fixes? So again, fixes assume that you are in the camp that feels something needs to be fixed. So of the camp who feels something needs to be changed, there's two major sides. The one side is dealing with the supply side issues, or fixes, which I have on the left, and the other is focusing on more affordability fixes. So the supply side is basically saying, hey, it's just a demand supply issues. If we build enough, there's no problem. Everyone will get something. Where the affordability side is saying, you know what? Affordability is not the issue, because no matter how much you're going to build, those with deep pockets, whether it be hedge funds or, serial investors, or even more mom and pops, like they're more on the lower scale, larger investors. But the point is, they'll always be able to buy this up and afford it more than any first-time home buyers would. So even if we build more, it's still not going to help first-time home buyers become owners. So they're looking at other ways to look at it. So first, let's go with the, the more popular and the more pronounced is the supply side. So For those in Ontario, as you may know, the provincial election's coming up. So our Premier, Ford, he created a housing. So basically, he put together a group of people to come up with a housing plan to help with, the housing issues in the province. So he just had the summit a week ago, and a lot of that focused on cutting red tape. So basically, as you can see there's 45 million is going towards Streamlined Development Approval Fund. And basically what that's going for is basically help municipalities cut out a bunch of regulations and rules and zoning bylaws to allow people to build more, whether they be like, site building in your driveway or laneway homes, building in your backyard, just building all these sorts of structures which aren't really common in Canada. They are in Europe or other really condensed older countries where there isn't a lot of land. They haven't really hit our landscape, but the idea is they're looking at that solution. So hey, let's just build more, get rid of all these zoning laws. And one of those zoning law changes is now in residential neighborhoods where it's, the standards always been, so in North America, you have houses. You have, houses, they're all single detached family houses. So part of that is to allow, so on this area where it's all houses, to allow 4-story apartments now. So it's going to change the look of a lot of very, rural or, suburban neighborhoods. But these are some of the things being promoted across the province. So again, the task force recommendations are in. He's sort of pushing these forward. So now it's going to be, there is an election coming. So we'll see what happens over the next couple of months leading into the election, but basically this is to help the supply. So a lot of what he's saying, he's also going to free up a lot of the green zone lands. The other one, which is interesting, I'll just point out, which some people don't really see how this helps supply, but he's also, so basically part of the zoning, like the 4-story apartment. So like in Vaughan, we had this thing where they were building a couple of houses, larger houses that were going against all the other houses in the street that were going in the similar direction. It's hard to say. So they were going east to west. The other ones, it's north and south, and they would have been larger and used more land space to backyard space than all the other houses. So a couple hundred people in the neighborhood went to Vaughan City Hall, complained about it. It was at the time when the largest protest at Vaughan City Hall, and the councillors in Vaughan City Hall approved, said, you know what, you're right, this goes against too many bylaws and things. We're not going to let the builder develop what they proposed. But then that went to the OMB, who just overruled them. So what's going to happen in the future, that did slow down the developer from building these homes, but in the future, to make it even easier for developers, what is being proposed is a fee now. So now if community members want to do that again, if they want to file a complaint or petition, they'll have to pay a fee to the city to file any complaints. So again, this is part of the streamlining process. So now, again, if you disagree with any of these changes, as a community members, community organization, it's just going to be a little harder and make it basically dissuade a bunch of people from signing up to file a petition, to submit their money, to fill out the paperwork, to pay a fee, just to say, hey, we don't agree with what's being developed. So there's a lot of things in this proposal which are going to be discussed over the next couple of months, both good and bad, but they definitely will increase supply. And that's the point. What Ford is proposing is a complete supply side fix. You're going to be build whatever you want, wherever you want, pretty much, with no red tape, and they're going to just push everything through. Again, you have to follow the basic OMB safety for housing, but other than that, a lot of the area restrictions will be gone. So that's supply side fixes. So if those come through, and again, there's 58 recommendations, those that come through, development will be faster, quicker, and easier, and people will be able to build. There will be a ton more supply in the province. Now, to the right-hand side, will this fix affordability? Well, this is where the debate comes in, right? So in Toronto, back in the 70s, there was a speculation tax because it was things went way out of hand. There was a bunch of speculation going on as investors thought prices would keep going higher. So they were buying, keeping first-time home buyers out. So normal working people, 2 working jobs could not afford a place to live. So Ontario came in province-wide and had a tax, and it was very effective. It basically shut everything down. Prices went way down. First-time home buyers were able to afford. It was so effective, it depressed prices for too long that they actually removed it, right? So taxes do work. And again, as we'll see in 2017, when the foreign buyer tax came in, both in Vancouver and Toronto, there was an immediate slowdown in prices, so much so that people were walking away from homes. They were leaving their deposit, walking away from payments. Now, again, people have found ways around that. because it's specifically about foreign buyers and not local. So hence why now they're just pushing a general investor tax, both foreign or local. Because again, foreign, we have this obsession with foreigners, foreign investment taken away from Canadians, immigrants taken away from Canadians. But again, so they're just trying to make a more blanket investor tax in general. So whether you're foreign or local, because honestly, local people are more than 90% of the investors buying it, and foreigners, I'd say, are less than 10. They've been set with 3% to a high of 10, but 90 to 95 are local people and not foreigners. So again, so we'll see what happens with that. So again, if that does happen, and what they need to be keen on is to make it so it doesn't hurt sort of the mom and pop, the first-time home buyers, the people just buying one homes. They're trying to make this for the, to slow down the large investors who have the 4, 5, 10, 20, 30, 40 properties. And there are people who do own 40 properties. So it's trying to sort of calm that down as opposed to the people that just don't want it to. So, there's been talk of, okay, you have your thing, you have your primary, you have a secondary, and that's great. And then anything past that will add a sort of an increasing speculation tax, which is great because then it's incremental. Everyone can still get their first home, and then it would just stop the subsequent, which I think is more fair than just a blanket one across the board. So again, I think it works. I think taxes do work, the stick and the carrot, but I think it will work. Just do it wisely. Second one there is about Bank of Canada rates. So here's another, I guess they're saying, hey, if Bank of Canada increases rates, it's going to be a 25% drop in home sales. Now, again, this is on the assumption that these very stretched first-time home buyers who can barely afford to buy what they're saying. If they were the number one purchases, I would agree. But again, as the other data is showing, the people who are buying are not going to be hurt when rates go increase. Like investors and people who are well off or likely can still afford to buy, even if rates go up 1 or 2%. The rate increases and tightening mortgage rules for that mainly hurt the first-time buyer. So again, I'm more of the the multiple home pass 3 home tax fan as opposed to just putting increasing rates to a level where it stops first-time home buyers. Now, there was a tweak to that in combination. The first one where there has been talk about having more tighter mortgage rules and higher mortgage rates for investment mortgages as opposed to first-time home buyers. Now that again, I would be okay with rather than these blanket across the boards. So again, basically that would try and keep mortgage rules and rates low for first-time home buyers, but then increase them for people who are speculating or investors, which again, I'm okay with because I do think first-time home buyers for a healthy nation, they need to be the number one group buying. So that's my bias. The last one there is, could a new tax on homes worth $1 million and up help? So this one, I'm again, these blanket sort of things I'm not as much as a fan on, especially when you look at urban areas like the GTA or Vancouver, Montreal, where $1 million is not a huge mention. I'm not really thing, and these ones aren't as specific. It's, hey, let's get $1 million. We're going to use the money for more affordable housing. But what does that really mean? This is more like an indirect taxing measure rather than a direct speculation tax. So again, I'm not a fan of this one either. So those are some of the proposed fixes. Again, the provincial ones will happen faster because election is coming in the next 6 months. The federal ones and the ones where the Bank of Canada, those will take some more time as there's not as much of an impetus to make that change. So now moving on to some of the local trends. So what's happening with pricing? So if you take a look over the last 30 years, there's been a steady increase, and that's why sort of the pro tip there at the bottom, don't try and time the market, right? Like timing the market with the stock market, a housing market, it hasn't worked out well. My clients who have tried to time it the last couple of years after COVID hit, prices are down, it's going to go down further. They've now priced themselves out of buying either an investment or a first time. So again, don't try and time the market. If you're ready and it's right and you're going to have it for a while, just find something that works for you that you can afford and go for it. So just a few points. I just circled 2 areas in red. So over this past 30 years, the 2 times where prices did not sort of go up is one is over here in the 2007, 8 to 9. So that's after the the US crash in the 2008. So it did sort of go down a bit, but then it was right back up. So it wasn't a huge crash like in the States. It went down a little bit, but then it just steadily kept going back up within 2 years. And then over here, you see the 2017. So right before the tighter mortgage rules came in and the foreign buyer tax in early 2017, there was this huge spike of everyone trying to get into the market before the new rules came in. Now, what that led to after is a huge drop in the market. And this is where I mentioned is I had some instances where people walked away from their deposit because the price after the foreign buyer tax came in, the price of houses went down more than what their deposit was. So financially, they said, you know what, I'm just going to walk away from this. And they did. And that was happening back in 2017. I know it sounds crazy now, but it happened then. So again, this huge spike was a cause of a couple of things which led to the crash. Now, this spike we've had going here now, the question is, will we have another red circle? Now, again, as you know, I'll allude more to later, I don't see anything happening unless there's a region for a major pullback. So here it was a tax that did it and tighter mortgage rules. Unless we have a tax and mortgage right rules or something, I don't see a reason why this body in motion is going to stop going up unless we do something to make it stop going up. Okay. In terms of the GTA area, again, what's going on? So again, as we can see, on the left-hand side, we have new listings, and on the right-hand side, we have the sales to new listing ratio, or how much of what's out there is selling. So last March was sort of a peak. So that would be, so there was pent-up demand, there was a lockdown, people were scared to show, waiting for vaccines, so waiting to buy, etc. So after, when things reopened up after that winter in February, March, and things opened up, there was a huge number. There was so much activity then, huge number of listings, and it's basically been going down since then, as basically it was a record year for sales. So a lot of the people who did want to sell or have property to sell, they sold it last year, right? So that's been huge, and it's sort of been decreasing in supply ever since. And since that time, since about March, well, basically everything that's been going on in the market, like here you see 100%, we got over 100%, which is crazy. But basically everything being put on the market was selling. And the reason it's going over 100 is because there were stuff there that was on prior and that sold in those months. So basically more than the listings that came out that month went on, but basically everything going out there was selling, and that pattern has continued into January as well. So supply is going down, demand is going up, and again, whenever you see a supply going down, demand going up, I think, you know, again, unless something changes that, it's just going to continue in the path it's on. So in terms of prices, well, and this is again a little funny. So sales, oh my gosh, sales are down 20%. Again, that's not really shocking. Again, if you go back and realize last year was record sales and everyone that was waiting to sell got in and did it. So again, it's unlikely we'll hit record sales because I don't think that many people want to move or sell their assets at this point. But what we have seen though, if you look at the second red bubble, is the average price increases. Prices have went up huge across the board, with the lowest one back in December was being condos. So if you see everything else went up, you know, 25 to 30% for detached, semi-detached townhouses. So the price difference between the other type of structures and condos became so high that in the past month, condos have sort of taken over, and now they're sort of catching up. So everything's going to be about 25 to 30, I think, by the next time we do this update next month. So again, it's just what's happening. So again, this is both in the 416 and the 905 area. There's just been this shrinking inventory, rising demands, and 416 I think is going to continue to be the hottest of all the areas in the GTA, as I call it the reopening trade, as a city and workplaces start to open up. I see that continuing to be the hottest. So on this slide, it's typically where I tell you, hey, based on what's been going on, these are best places to buy in Southwestern Ontario. So in the prior months, I was, you know, for the last 3 months, I've been saying, hey, Toronto, Mississauga, South York region, they're the best deals. They're the best, least appreciated. So there's the best value right now, and especially in the condo area. So that's what I've been saying for the past 3 months. And you know, you can go back, check my videos, but I've basically been saying that since about October. Get in the, you know, the GTA, get in the condo market is the best value right now. I should have done that myself instead of, but I was helping clients do it instead. But basically right now, I'd actually like to say, you know, I didn't highlight anywhere here because I don't really see anywhere right now as, hey, there's a great value, there's a good deal per se. Now it's more just finding an individual unit that works best for you in your price range, whatever you're looking for. Whether it's a condo, townhouse, house, just find something that works for you, something you're willing to hold for a few years. It seems like a fair value because everything is basically at extreme levels. So the one place I saw light for the past 3 months, which are GTA condos, they're now in the same boat. So they popped 10% in the last month. So now everywhere is about the 25 to 30% from where they were a year ago. So yeah, the longer term, I still recommend though the GTA as the best place to buy because it has the most corporate headquarters, the biggest hospital clusters, the biggest university clusters, the most entertainment and sports venues. It's the highest demand area, in Canada, and it's the fourth largest city in North America. It has a lot of reasons why it's a #1 spot for immigrants when they come here, where they want to go, and even for younger people when they graduate, after they, graduate, get the degree, they want to come work and live in the city. So I still see the GTA as a #1 long place to invest for stability and prices. I do see some of the smaller towns possibly decreasing a few years from now as the novelty of a small town wears off, and people do want to come back, especially younger people. Younger families or younger people without kids do want to come back to a more central urban area. So that was Southwest. Now nationally, where do I see as a good place to buy? Well, same thing. The last couple of months. So this is, again, a Bank of Canada does an exuberance. So exuberance, they're not really saying overpriced because they don't like to say that per se, or overvalued or bubble, because that just sends all flags. So they use the word exuberance. It's basically where they think, hey, people are getting a little too excited, they're overpaying. They don't even use the word overpaying, they just use the word exuberant, but basically they mean overpaying. So in the areas in red and yellow is where they've thought people were overpaying and prices were a little higher than they should be, and I more or less agreed. And the big deals again were in places like Calgary, Winnipeg, Edmonton, Victoria, and Moncton. Well, again, so outside Canada, the last couple months, that's where I've been agreeing. Hey, the GTA area, all of Southwestern Ontario is a little saturated. Some of these, other major cities and other provinces look like a good bet. So the same thing in the last couple of months, Calgary and Edmonton and Moncton, they've went crazy in sales as well. So the bidding wars are going there again. Prices are hitting record prices there again. So again, that demand now, and that the demand supply, as I mentioned, it wasn't just Canada, and the investors weren't just Ontario. Sorry, it wasn't just the GTA or Vancouver. This is now all across Canada. So right now, even though the outskirts of the Vancouver area, Victoria, Calgary, Winnipeg, Moncton's not on here, but Moncton as well, those places as well, I expect them to be either in 1 or 2 months turning yellow, orange, or red, as well as the buying frenzy of people wanting to get in, the fear of missing out just spreads across Canada, and people are just buying up all across this wonderful large country of ours. So again, as I mentioned, as the run up, don't try and time the market. As I said in Players Today, don't try and think you're buying now for a short-term flip. It may work out again if this self-fulfilling prophecy of price increases keeps happening and speculating, then great. You can flip it around in a year. Like I've seen a ton of listings bought a year ago selling now, flip it in a year and make some good money. But again, just because we are at all times high and continue to go, don't bet on this continuing. So be ready to hold it for a few years, rent it out, get some income, etc. So that's mine. I know it was a bit more this month because there's just been a lot going on, but I'll pass it to Seb now to talk about mortgages.
Well, thanks, Jeff. That's definitely, there was a lot of new updates, and on the mortgage side of things, some interesting ones as well. So I'll start with looking at fixed mortgages, and as you know, they follow the Canada government bond prices. So they've been steadily increasing, as you see on that graph here, from for the past year by about 350%. They were below the 0.5 marks a year ago and have reached over 1.6. So if you've been a buyer and you've seen those prices, those mortgage rates, they've been increasing tremendously this past year. And it's not only the 5-year rate that most people tend to buy. That yield chart here shows the various yields for the Canadian government bonds. And it clearly shows that whatever the term of these bonds, whether 1 year, 5 year, 10 years, there's been a large increase all over the board. That has led to all fixed mortgage rates increase dramatically. So that's on the fixed side what happened. On the flip side, at yesterday's Bank of Canada announcement, which was the first one in 2022, despite many economists predicting it would increase its overnight interest rate, they kept it at 0.25%, as it has now been for about 2 years. That being said, they do target to increase the rate later this year, maybe as early as their next announcement in March. So keep that in mind. I do, unless something happens with a new variant of COVID, I do believe the next announcement there will be a rate increase. So with these two pictures of the fixed rate continuing to increase and the variable rate staying at their lowest in history, we've seen there's a gap between those two that continues increasing and increasing, which creates a lot of dilemmas for buyers. As most mortgages now, there's about 1.5% difference between variable rate and fixed rate. And so basically fixed rates are basically double than variable rates. So a lot of people are thinking, well, should I, keep variable? I know it's coming up likely in a couple of months, but it's a 1.5% less. So by the time it goes up 1.5%, it's going to take quite a few years of me saving. So there's different approaches to that. In the end, every person has a unique situation that may want fixed rate versus variable rate. But now it's a very, very large gap that we haven't never seen before. So for anyone wanting to understand why the Bank of Canada decided to stick to their current low variable rates, despite the high inflation rate we have, we really have to look at the global picture here. As we now live in a world that has connected markets, and we can't just look at just our inflation and our economy alone. So on the next slide, you can see that's a GDP performance chart showing the G7 countries, and everybody sees the big drop here, which is the COVID drop. But in terms of recovery, Canada is fourth out of the G7, behind the US, who's the only one in that list here that has fully recovered, is over the 100% mark that was before COVID hit, but also behind France and Germany. So, and the US is the only one that has surpassed that. So overall, there's nothing really to boast about here because we still haven't recovered on the GDP to prior COVID. The other thing I'd like to look at is the employment update. In Canada, we have surpassed the pre-pandemic level in terms of employment. So you see it from this graph, a huge drop, and now we've surpassed those pre-employment level. But our cousin down south in the US, you've noticed it's still not the case. And as they are our largest trading partner, it does still impact us. So they're getting close, but they're still not quite there yet. As mentioned by Jeff, the home price index is through the roof, now at the 25% plus mark, year-over-year increase, and which has never been seen before. Jeff was talking about earlier about the 2007 and 2017, and you see those two, jumps up. They've never been, or they've just been above 15%, but never as high as it is now. So it's definitely a unique time. And on top of that uniqueness, there's a unique situation on the immigration side that Jeff alluded to. So we're one of the OECD countries with the largest immigration plans, and we have over 400,000 new immigrants every year planned for the next 3 years at least. What's unique about immigration, though, is that 60% of them are economic immigrants, and with 70% having a post-secondary education. And so they enter the Canadian workforce with healthy paychecks. About a third of them, they were homeowners beforehand, before moving to Canada. So they're definitely looking at becoming homeowners again as soon as their financial situation and their credit situation here in Canada allows. And then when you track 5 to 10 years after newcomers have come to Canada, there's about 53% of immigrants that have become homeowners, which is only 6% less than the Canadian-born homeowners. So you can really see that after a 10-year period, any immigrant has been basically reached that average of Canadian homeownership. So it's fair to say that just with immigration alone, is a very large new demand year over year for housing for those immigrants. And especially in the GTA, where it's the largest proportion of them end up settling, as Jeff mentioned. So with that in mind, and the fact that new builds are not able to catch up, with what the new demand coming year after year, there's still a very strong imbalance, as Jeff mentioned in the previous slides, between the consistently increasing demand and the amount of new builds being built. The graph here is quite telling, showing a steady decline in the ratio of new home completion to population growth. And we can see it's been declining. And at the end here, we can see a recent rise in the ratio, but it has been driven by a temporary decline in new immigration during the pandemic and not at all in an increase of new build. So this ratio is set again to dive again at record lows as Canada starts its ambitious immigration goals in starting this year and all the way through 2023. So what does it mean then? If we summarize and predict, as Jeff mentioned, prices, I do not see them going to stop rising until new builds start catching up with immigration, because supply and demand imbalance and new immigrants need a place to live, and that's a given. Also, there's been no change since last month for the Bank of Canada, still predicting to increase their rate later in 2022. But understanding that the fixed rates have already increased dramatically, 300% over the next year, a lot of people start looking at variable as, even if it increases, it's still a 1.5% lower than the current fixed rate. So it can increase quite a bit before it makes sense to go fixed, before it bothers people. So it's an interesting and something I haven't talked about, but it's always there, is we do have a very high stress test at 5.25% right now, which means anyone buying today has been stress tested, which means would be viable financially to hold a mortgage, even if rates were going all the way to 5.25%. So that's kind of a safeguard that the Bank of Canada has been putting in place, the federal government, to ensure that whoever is buying today, even if prices are going up, they could be okay up to 5.25%. So very, very big gap between that stress test and the 1.5% current rate in variable rate. So, and lastly, I just talking about deciding on variable versus fixed. You really, it would be unwise to pick one just by when the Bank of Canada is going to increase their rate. The same way Jeff mentioned earlier that buying, if you need to buy right now, if you find the right property, and now is the time to buy if it's good for you. I always tell any buyer that fixed versus variable, they have to look at their own situation. And for some people, variable would be best, and for others, fixed would be actually best. So that doesn't really matter whether the rates are going. So that's kind of my summary and prediction, and I'll pass it back to Jeff for yours.
Thank you very much, Sebastian. I agree with some good points there. And I know that variable versus fixed conversation is always interesting for clients. So, and again, it's a lot of them jump on prices, but it is more than just the price. It's, looking at other factors. So, yeah, the only 2 points I'll add is I just, as he's saying, I see no reason for change. I see this continuing to be a seller's market for 2022, unless something significant changes. And again, those changes mentioned could be taxes, investment type taxes, or a change in mortgage rules or interest rates. So that would be sort of a significant change that I see would, change the current momentum and flow. And apart from that, you see the continuing reopening trade in the GTA with offices reopening, restaurants, bars, entertainment, as well as the immigration, where the Toronto-Mississauga area and the condo market sort of leading in both of those. Particularly, I see the condo market leading in price growth as it is right now in the month of January, and I see that continuing for the next few months until this separation between detached houses, semi-detached townhouses, and condos gets closer. Once they get closer again, then I see it sort of balancing out. So that's our thoughts on where we see things going for the year. I hope it has been useful. And again, post any questions. Let us know if you have any feedback or anything you want to know about. Feel free to reach out. So apart from that, salut. Have a good day.
Bye-bye.